The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out with the German DAX. As you can see here, it follows the Fibonacci numbers quite nicely. The high we made yesterday in the German DAX at the 78% level was 11,770. We've now dropped 100 points down here to 11,651 in very nice ABCD format. So everything seems to be copacetic over there. There's no panic over there in Germany as of yet, even though there is a great deal to talk about recession, and everybody that's in the recession has to go to the bank and pay the bank to hold their money for them. I guess being under the bed or under the mattress doesn't work anymore. But let's take a look here at the FTSE to see how it's doing. It's actually done a little better today. We'll bring this up here so you can take a quick look at it here. And you'll see it's made a lower bottom down here. We made that double bottom. It was the holiday, of course, on the on Monday was the German the banking holiday, and now we've had a little bit of a rally with some resistance possibly coming with that down-troping with the down sloping trend line comes in at 7130. Getting above that gives it a little bit more power if it could get moving up to that level. The one that's really interesting here, folks, is the German Bund, because I'll want to bring this to your attention. We have a lot of people that are watching that because it's almost ready to make new highs. We've made new highs in Treasury bonds and Treasury notes here, i.e. lower rates. So that goes. Let's get this up here. Yeah, burying a coffee can would be really good, Marshall. I think that would be, just make sure you put it in aluminum foil. You'll notice here that we're almost to the old high up there at 179.60. We're 179.07. This is already at a negative yield, so we'll see how that ends up. I want to walk down a memory lane here with you folks, because something pretty significant is happening. I don't know which way to do it. I guess I do it the short way or the first way. Let's do it this way. Hold on a second. Let me get up the silver chart right here, because this is just a 4-minute chart overnight, because I was following it just to see how well it's going to line up with some of these numbers that we look at. And if you take a look at here's silver last night. Now, we had a 60-cent move up. Last night we backed off 30 cents. And from 30 cents we rallied right up to the exact 1.618 expansion at 1847. The high was 1847.5. We're now trading at 1820. I don't know if that's going to be a major top in that, but the fact that it hit that 618 retracement overnight is important. And the reason why is the gap that they left on the weekly chart on silver was accompanied by a drop in open interest, folks. It's hard to believe, but that's what happens. That's short covering. That's not new buying. Whether that means much or not, I don't know. Gold is still getting open interest, so there's still bullishness in the gold, but the silver, a lot of that had to be short covering because it was shown in the figures that that's what's happening. Now, I've been trading silver for a very, very long time. That's how I got my start here. And oh darn, that's Billy Ray. We got a chance. I have to call that back. I have to let that ring. All right, let's get back here and take a quick look here at you know, the early morning, folks, is my busy time of the morning, and it's the most difficult time for me to do the show. But let's go through memory lane here to go way back here into March of hold it, just give me a second here. We'll get this up here. Oh, there we go. Exactly who was calling. You're right. It was Billy Ray Valentine calling. That was Jimmy Elder calling. Anyway, you'll look here. There's March 19th of 2008. Of course, you know, that's a year before the crash. I was in London at that time, and I think I've told the story. I was working with a gentleman that was doing a lot of trading, and I was trying to convince him that to work with a gentleman that could probably help him out, and it all worked out okay. But we were there on March the 19th, and we were sitting in one of these beautiful London private clubs. I mean, everything was a Aston Martin, a Jaguar, Rolls-Royce, Bentley. That's all it was. There was butlers everywhere. It was very, very quiet. You couldn't conduct business except in private rooms, and we were in a private room. There were 5 of us there, and the gentleman was there, and I was going over some patterns and stuff. He was not a technician. He was a fundamentalist, and he said he had a position in silver, and what would he do with it? Well, I'm looking at March 19th, and you can see we made a higher high than the previous 2 weeks ago. This was right at the time it was happening. It's hard to believe. It was at $21 and change, and I said I wouldn't hold silver if you let me trade for free. And he laughed at that comment, and he said, I'd never heard anything quite like that before. And I said, well, it's a giant ABCD pattern, as you can see here. And I showed it to him. I went through all the numbers, and he believed in, numbers of sacred science and stuff. He understood a little bit about that, but he picked up his the phones there. He had no cell phones in the place, so they picked up a private phone, and the next thing, he sold it, and they do it in kilograms over there. They don't do it in contracts, and he sold the equivalent of 400 contracts within 10 cents of the high. You see that big red bar? That was the 20th of March. The next day, it dropped $4. It went from 21 all the way down to 16 and change, $4.50. And he made a little more than $5 million by getting out of that contract. And before I left, he stopped by the hotel, and which was a sort of surprise to me, and wanted to thank me for everything, and handed me an envelope, and inside the envelope was one of my very favorite presidents, Benjamin Franklin. Okay, let's move on. That was from Joe Biden. Hold on just a second, folks. Let's get up here and take a look at one more thing. I want to talk to you about the silver, because it's very important, at least from my point of view, and I hope it's from your point of view. Let's go back in time a little bit more, and we'll go back to 2000. Well, this is forward in time, I guess. We're going to take a look here at the there we go. You'll see here, this is April of 2011. We were in Hong Kong for a seminar, and silver had gone from 27 to 49, matching the old high from 1980, and open interest was dropping, and I was very, very bearish silver at that time. And of course, you can see silver went from 49 to 31, then rallied back up. Folks, the reason why I'm bringing this to your attention is, if this in fact is unfolding like it is, we're going to get a really good, easy place to short gold and silver in here very, very shortly. But you have to wait a few days, because you don't want to try to pick a top. You don't get an extra money in your equity run for picking a top. So keep an eye on it. Very, very important. But we will be watching it for sure for our 24/7 subscribers, and we'll take a quick look at that. We got a break coming up here. If you folks have any questions, it's 877-927-6648, and I'll be happy to answer them if I possibly can, and then we will move on to the next one.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, let's take a quick look here at the euro that we were talking about just a few days ago. I wanted to bring this to your attention because we're down to the 78% level now, folks. We're down at the 110.80. That's the 78% of that whole move. Of course, that's based on the U.S. dollar index, 53% of it. So anything below 110.60 would really tell us that we're ready to go down a lot lower. So that 110.60 is the key level to watch below that, because 110.80 is the 78% level. And so I would pay very, very close attention to it. Remember, these patterns, they don't work all the time. They work some of the time, and that's what you have to prepare yourself for, is the ones that don't work. And that's the real key, to looking at, because it's all based on probability. That's all it's based on. Now, since we were talking about a 3-drive to a top pattern, we also brought this to your attention yesterday when Mr. Z was asking us about the importance of the level of 123. And as you can see, 123, we had a ABCD pattern there. It was also at a 38% retracement of the high that we made 2 weeks ago. And so this was a very important, and we came all the way down, folks, and we stopped exactly, to the tick at 121.60, and we rallied 60 pips. We're trading about that level now, 122.20 and change. So that 121.60 is extremely important. And we see we have higher bottoms through here. That makes it a 135 pattern right at 121.60. So that's one of the reasons why you want to, keep a close eye on it. That's all I can tell you, that it looks real interesting. Whether that means anything or not, remains to be seen. Does anybody have any, I preferred my U.S. currency, the image of Grover Cleveland on it. Grover Cleveland, Mr. Cleveland is on the $1,000 bill, folks, just in case you didn't know. And anybody that can guess the person on the $500 bill will win a prize. Too late. It's William McKinley. And if you want to know who's on the $10,000 bill, I will tell you, Salmon P. Chase. That's all I know. I had a $500 and $1,000 bills, but never had a $10,000 bill. Those were not for distribution, folks. Those were only for interbanking stuff, from what I was told. All righty, let's move on to one of the other things that we need to talk about, and this is the here's the crude oil this morning, folks. We're really in a really interesting area in the crude oil now. We're right up against this sloping down line here at the 56.30 level. So keep a real close eye on that at that level. It'll be very, very interesting, of course. Hold on one second, please. I want to be able to take a look here at one other thing. We have one other question someone's asking us, and that is about, oh, here's what I wanted to talk to you about. Hold on one second here. This is why I wanted to show you what I was looking at last night. This is a 4-hour chart. Let me get this up here. And you'll notice here that we had that big ABCD pattern that completed up there at 1814. Well, since the market is accelerating like it was, I mean, we went, you can see the gap. You see the gap there at 1740? That was the gap Monday morning or Sunday night. I mean, that actually gapped up. I mean, that's hard to believe that it did. And it stayed there for 20 cents, and then, of course, it took off. I hadn't seen this very often. So that happens to be short covering. Now, all I did was I started watching it. I wanted to see if it was going to make any interesting numbers on the way up, and so I followed it. I wasn't up all night, but I was off and on taking a look at it, and that's when I noticed that early in the evening, just get this up here. The reason why I'm showing you this is these numbers work on different time frames, but you'll notice we had a 30-cent break. We went from 1831 down to 1802. Then we rallied up to the high of the 1.618. That was 1847. And we got down to, I believe, 1820 or something so far this morning. But until that market goes back below 1760, this is not going to be any type of a top or not. Remember, silver is swinging a buck at a time, folks. This is, this is very, very interesting. And not only that, it's historically, when you start to see stuff like this, you know that something really big is happening, just like they are in most of the other markets that we're looking at. Also, we have to talk a little bit to Ruby in here, Ruby, because there's going to be a possible problem here with your sugar the sweet. Let's get this up here, because I believe we're breaking down now, and you don't want to stand in front of this puppy. Wait till it gets down to that 1.6. Well, it's not very far away. It's very close to the 1.618 at 11:15. I think the last quote I saw was 11:20. So it's probably going to get there. But it's breaking that triple bottom. So be very, very careful. A lot of these things, folks, there's a lot of nervousness out there because of the what's going on with the different countries and their negative interest rates, and talking about recessions and stuff like that. And maybe it'll happen, maybe it won't, I don't know. But the talk that's out there is enough to scare people. So that's the main thing to, sort of keep in mind as you look at some of these things going on. I do believe if we go below that 2850 in the S&P and we close below 2835, the scenario that I talked about over the weekend and Monday, Tuesday, will be possibly in vogue for that, if that isn't going to be the case. So we'll have to wait and see. We'll just be very, very careful. Much of this is related to that yield curve, folks. Do you realize that CNBC quotes the yield curve constantly? They go from the 2-year to the 5-year to the 10-year, and then sometimes they even show the 30-year to show the difference in these things. So this is why it's so very, very important. I don't know about negative interest rates, but before I do anything like that, they're going to have to pin me down on a picket and drag me through a mud field or something, because there's no way that I can see, letting somebody hold your money and then give you less of it back. That just doesn't make any sense. Let's see, we dropped. We've actually dropped about. We dropped exactly 20 cents. The harmonic number in silver is 18 cents, so that's very close. Now, if silver's any good, it's going to stop right here at 1826. We're at 1830 right now, and then it's probably going to get a little bit of a rally. But if it does that, then it's got a little bit of a chance. So keep in mind that could easily happen. So watch it very closely. I'm watching it for two reasons, because there's one signal that I've been shown by John Jameson that is really quite interesting for low risk, but that hasn't happened as of yet. Okay, one other question is about some of the other commodities. The corn market. Thank you for asking about the corn. 1 second, we'll get this up here to take a look. Any questions that you have now, folks, is please let me know, and I will be happy to get this. We are trading. Just get this second here. All righty, let me get this corn up. We're now trading at around 367. We're down at those old lows here. We've taken out that low. We're still looking for 355. If we get there and there's not a world panic, I'm probably going to be buying corn. I'll probably be buying corn even if there is a world panic, because I don't follow the news very much. But you can see the 135 pattern that we have here. That was just absolutely perfectly. You have high to high, high to high. The ratios are matching up nicely. They see the market breaks down, 5-day rally into 382, and it looks like we're going to be coming in sometime probably around right around the holiday, around the 3rd of September. We have to watch that. Right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted, someone asked a question, what do I use to confirm or, other things that I might be looking at in the market, like oscillators or moving averages. I don't use any of those because I believe it's the price chart that counts. One of the things that I do look at is a New York Stock Exchange Index, and the reason why is that's the real market. That's 2,400 stocks, and they're certainly the biggest and the best in the world, and they're not, overly weighted like they are in the NASDAQ. So I watch that, and if you'll notice, the 61% retracement that we made yesterday, that's when the NASDAQ was up at that magic level. Remember I told you yesterday to watch 56.85? Let's try it again, Larry. 76.85 in the NASDAQ. We got to 76.92, and then we dropped a couple hundred points. But the reason why I'm watching that, because that's the real market, and you'll notice that it made the high in the first 2 hours of trading, and that pretty much told you that there's at least with a high probability that was going to be the high of the day, and it turned out to be that way. Now, it's not always that way, but that's the way it was. I also do look at the Russell, because the Russell has been the weakest of this group, and it certainly is continuing to be weaker. So let's just get this up here and let the folks take a look, because you can see here that we had what wasn't even a dead cat bounce. The hogs opened 3% lower. There's something wrong in the hog market, Ruby. We've been saying that. Once it went below 63 in that hog market, it's not good. I don't know what the news is. I don't really care. All I know is, let's just look at that. Look at those Christmas hogs here. Well, you can see but there's oops, that's cattle. Cattle are different than hogs. Let's get this. There's hogs. Yeah, boy, that's really looking bad. That means we're going to make that big ABCD path. See, folks, I do this show here. Never mind. It's all based on risk control. I don't know the fundamentals about the hogs. It doesn't appear anybody else does either, because they were really bullish between February and April when there were going to be no more hogs in the world. And now look at that. We got more hogs than we've ever had, and hogs have dropped 30 cents a pound. The ABCD structure on that is going to take it down to about 56. So if we're 61.50, we're down 3, we're at 58. It looks like we got a new 2.5 cents to go to even make some type of a bottom. So that's why I'm a technician. You don't have to remind me of that. Let me explain to you. I became a technician in the 70s, 74, after I gave back all my money. 76, when I came back, I was this is an interesting story for me. It is, because it's one of the, you have these moments in your life when things are very, very important. I'd start buying soybeans and soybean oil in late 75, early 76. I was buying oil and beans, and Oscar McClure and Dave Nelson were my mentors, along with John Hill, and Oscar and Dave were fundamentalists, and so they were giving me the fundamental stories, and the chart was showing that it was a fundamentally bullish thing. It's a beautiful Gartley pattern, so I got everybody who would listen to me to buy soybeans and put on these bullish spreads that we had on, and they went extremely well, and made really good money. And I believe it was June. Yes, it had to be June. It was June, I believe it's June of 76, because I went to work for Drexel just shortly thereafter that. A big report had come out on Friday, and it was so bullish that they said the only soybeans that were going to be available would be seen at the Smithsonian Institute in Washington, D.C. That's how bullish it was. And they were calling beans to be up the limit 3 days in a row. And the limit that time, I believe, was about 30 cents. So that would have been $1 a bushel. And I had a lot of contracts on. And I was reading that off of the Reuters machine coming out of London. And I walked over to my desk, with my broker's desk, because I was just a customer. And Bob Shattuck was my broker. And I said, Bob, let's start writing tickets. I said, I want to put a stop on everything at 1 cent below the previous close. In other words, if they opened lower or went lower, I didn't want anything to do with it. He said, well, that's probably not going to be happening. So Well, Ruby just bought gap down with stop under the low in December hogs. Good luck to you, Ruby. Let us know how it works out, because you must be clairvoyant, but as long as you're controlling your risk, I'm all for it. I hope there's an expansion number down there that might give you a little bit of relief, which would be 1.618. Getting back to where we were, I was writing tickets and everything, and on the squawk box it was saying, well, the limit, all the soybeans and all oil and meal is going to be up to limit a couple of days, no problem. This was an hour before the open. The second, about half hour before the opening, he says, well, there's a tiny bit of selling in next year's soybeans, but really nothing much. He said the early this year's crop, he said, it's really tight. We won't be trading that for a couple of days. 15 minutes before the opening, he came on. He said, well, there's a little selling coming up in the far out of 76 contracts, but the nearby stuff is tight. It isn't going to move. About 3 minutes before the opening, he got on. He said, oh my God, oh my God. He said, they're selling everywhere. They're selling everywhere. And they opened like, I think, a dime lower, something like that. All I know is I got filled on everything right near the high of the day, because I was fortunate enough to put those stops in. They went limit down for 3 or 4 days after that. And there it was, the most bullish news that they'd ever had, and it was all over. And from that time on, I said, that's it. You know, they can take all that fundamental stuff and put it where the sun is setting in the evening, because it didn't make anything to me. So when you see this news, whether it's hogs or whatever, negative interest rates, get ready, because I will say this, folks, we've got big drops in open interest in the crude oil. Stop it, Larry. In the Treasury bonds and Treasury notes. The 2 years, the 10 years, the 5 years all had big drops on Monday, and yesterday was virtually nothing. So this is that's about it. Like Yogi Berra said, yeah, David's right. It's just deja vu all over again. Anyway, those are just some of the things that we're keeping an eye on here today, and make it look a little bit interesting to see if that's the case. We'll pay very, very close attention to it. But watch that figure of 28.45 in the S&P, folks. If we get below that, that will be the first sign that there's trouble in River City, and below 28.35, River City will have shifted up the bayou, so keep a close eye on it. We'll watch it very, very closely here. All righty, now let me see. We got the break coming up, and then what we'll do is we'll take a quick look at a few of the FANG stocks. I don't know if we got to do that yesterday. These questions that you're bringing in, folks, are absolutely fabulous. It really makes my job here a lot easier. The lines are jammed right now at TFNN, but if you call 877-927-6648, we might squeeze you in.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, we're back, folks. I posted the chart for the euro that we posted a little earlier. We just hit the exact 78% retracement there at the 110.70 level. Rally just, a couple pips means nothing, but the fact that it hit it is very important. You'll notice at the high that we pointed out yesterday at that 61% retracement up there at 111. 65 certainly was correct. We now dropped 80 pips, which is the harmonic number in the euro. So if the euro's got any hope at all, it's right now. And you don't have to risk very much, because anything below 110.60 would certainly tell you that there's problems in River City, and you don't want to be around if that happens. That's for sure. So that's one of the things. Now, Ruby just mentioned that she had bought the sugar down around that 111 or 11 cents a pound, and I don't know how it's working, but she's using a stop. You can do anything you want, folks, as long as you protect yourself. As long as you do that, you're going to be all right, because some of these that you're going to have, will work. Some of them don't work, and that's the key, to be watching some of these things. So that's more or less what we're looking at here. So we'll do one thing at a time to see how it all works out. 1 second. I will tell you this: the silver, after we made the low down there at 1826, made a perfect 61% retracement up to 1840, and it's now trading around 1830. So it's following the pattern quite nicely. And if you were to look at it, you'd say the ABCD structure on this would be down to about 1810. And if you get below 1810, this might be a major top here in the silver today, especially since this open interest is not validating. There's a lot of buying coming in. We see the open interest in gold is still going crazy, and gold on this last run made it up to the 78% level at 1557. We're trading at 1551 right now. So all of those are telling us that's pretty much what we're paying close attention to. So that's a little bit early in the day, but we'll find out how these things unfold as we move through here this morning and take a look at some of these things. Okay, no questions, so let's move on, and we will talk about the couple of the FANG stocks that someone asked us about. And the first one was Apple. I'll bring this up here so you can take a look at it. This is the leader of the pack, biggest one on the stock exchange. It looks like we're going to have some pretty good support at the 185 level. We're still trading above $200, I believe. So it's still got a ways to go if it makes that ABCD level. So that's pretty much what you're looking at. You can see the low that we made on Memorial Day was exactly 61% at 170. From there, we went up all the way to 222. So you know, that's a pretty big swinging stock here. So it looks pretty much like that's where we're headed towards, is the 85 level. If you look at all of these FANG stocks, and we've already looked at them, I don't want to waste any time. See a breakout in platinum. Let's take a quick look at that. We had a really nice, hold on a second, I'll get this up here, Ruby, so we can take a look at it. Give me 1 second here. Okay, PL, platinum, where are we at here? Oh dear. See, P starts A, B, C, D, E, F, G. Here we go. Oh wow, heck of a move in platinum. Yeah, this is it's broken out. Well, I guess so. Yeah, duh. Hold on just a minute here. You can see if you like Gartley patterns here, you can see here. This is the platinum chart. We had a really nice support there. There's your ABCD pattern at 835, and here we are now. We're up $60. We've taken out the highs of April. Let's try that, July. That means the ABCD structure on this takes us up to the double high at 920 without too much trouble. But the thing you have to be worried about here, well, you don't have to be worried if you're long, but well, you do, I guess. But you'll notice here we took out the highs of July. That came in at 890, and we went up to 894 today, 896. And if that just could be validating the 78% level. So it's important that platinum doesn't give up any of this today, because it would be that could be a potential double top at the 78% level, but it's still, you know, moving a lot higher. So I would, you know, if you're in this, I would, you know, raise your stop up to, you know, something like 1887, or excuse me, 887, because if it gets back below that 78% level, I would give it a little, I would be a little bit of suspect. But that's what I'm seeing in the platinum. There was a perfect example of a Gartley pattern, folks, and sometimes they work, sometimes they don't, but when they do look pretty good. So those are just a few that we're keeping a close eye out here this morning for sure. Okay. All right, the next one that we want to talk about, we talked about the silver. Let's switch gears here and move over to the copper market, folks, because the copper market has got a real chance here to make some type of a major bottom. Let's get this up here so that you guys can see it. And then, you know, Dr. Copper is usually, you know, ahead of the market a bit, so we'll get this up here because we're going to see where we are. Yep, we got a chance here. Hold on, here she comes. Be patient, be patient. We'll be looking at this in just a second. And here we go. This is a weekly chart in copper. And as you can see here, we're down. We've taken out all the lows here, and we snapped back above it. The low, we got as low as 47. We're now at 54. So 247 to 254. And now you're above the 61% retracement. You got to keep an eye on copper because it's got a chance to move from here because of the ABCD down structure, and also the major is that 61% level that we hit 3 different times at 254. 254 and again 247. So that's why I would watch the copper with a great deal of interest. Let's get this up here and you'll be able to see it on a daily basis. You'll see it a lot easier and you'll be able to understand what I'm just talking about here. You see, we've taken out all those lows. The thing is, though, you've got the potential for it to go all the way down to 240. So this little move that we're having so far this morning doesn't mean very much. It might, because of the fact of where we were from last year in August and December, taking out those lows and not turning. But if it goes back down again, you're going to be looking at another 10 cents lower and even possibly 27 cents lower if things get really bad with the tariffs and all this other stuff. Who knows? You know, it's going to be it's not going to be easy out there, folks. A lot of news going on, so pay close attention to that for sure. We'll watch it. Anyway, the gold is now down. We're down 15. See, the silver's starting to break already. I think we're gonna get to see silver about 1810 pretty soon. We're at 1828 right now, and we'll find out what happens with that. And we'll move on to the next one. We're trading at 1549 in the gold. That's down about $8 from the 78% level. And so all of that means things are going to be real interesting today, no matter what. So very important. The key levels today: 28.45 in the S&P, and 74.90 in the Nasdaq. If we get below those levels, it's not going to look pretty. But until that happens, we just bouncing around. That's for sure. That's nothing more, nothing less. That's really what we're watching here. Okay, let's move on here. Well, we got a break coming up, and then we'll wind up the show. Keep those cards and letters coming in, folks. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we had a nice call from Ruby during the break, and she asked us to take a look at the December soybean oil, and we were chatting about that just the other day, showing that it was most probably getting ready to come down and test this uptrend line that we have. It's right near that level, but the fact that it's below the 78% level, Ruby, is I would just stand aside and wait to see if it can get down to the 27 40 level is one of the things that I would be watching. I've also had a request to take a look at that silver that we were looking at. I'll bring this up here to show you, and this is just really short term. It's just 4-minute chart, folks. You know, all it is that you're looking at a 1.618 expansion of the overnight high. You came down to 1825, you rallied up to 1839 as an exact 61% retracement. The ABCD structure on this takes you to 1815. So far, we've been to 1819. So that's what we're watching. Anything below 1810 would suggest that possibly this market has made a major top, and then it would have a big reversal today, which would be really something. That means you could see silver at possibly even 1760 or something like that today if it were really a big reversal. So those are the main things that we're watching here this morning. Tomorrow, folks, is a very, very wonderful day at TFNN because we're going to have nobody other than the wizard himself, the man who calls it to the minute, Mr. Norman Winsky from, where is he from? He's from Naples, Florida, and he'll be on tomorrow for Astro Trends, which is always a lot of fun. So the one thing you want to do today is always protect yourself. Nobody else is going to. Live every day in an attitude of gratitude, and may God bless. And we'll see you folks tomorrow. And next week, we're going to have Bill Meridian back on the show. You know, he's been bullish bonds since Hector was a pup, and I want to continue to see if that's going to be the case, because usually the bonds top in August and move down, so he'll give us some information on that. So have a great day, folks.